So right now, based on the fact that the underlying markets have been doing well also, closed-end fund performance has been positive this year. We've seen closed-end funds hold up pretty well, and it really does, they're following the underlying market themselves. We haven't seen any big disconnects in terms of the stock prices of the closed-end funds versus their net asset values. So they are in line with the underlying asset class performance right now. So when you're looking to put money into a closed-end funds, you want to start off with the very basic. What asset class are you trying to get access to? That should be your starting point, not that you want to get a closed-end fund with the highest paying distribution yield. So you start with which asset class you want to be in. A couple of the other things you want to consider when buying a closed-end fund is whether the distribution is going to be stable, because clearly investors buy closed-end funds for that steady income, and being able to determine whether the income will be steady going forward is one of the key factors. Look at the discounts or premium in terms of where the funds are trading right now. Are the valuations cheap overall on the fund itself, whether it be from a 1-year, 2-year average discount standpoint, or how the fund itself is trading compared to some of the other similar names within the same asset class of those funds? So I think we've seen, as I said, the funds have done really well this year because the underlying markets have been performing well. Because of that, we've seen quite a bit of buying in the closed-end fund, and this buying has occurred well ahead of what the underlying is doing. So for example, if the underlying muni market is up, let's say 2%, closed-end funds are up 5%. So clearly narrowing of the discount. That means valuations are looking a little bit expensive right now. There are several names that are trading very close to the net asset value or at a slight discount. So valuations are rich if you consider 1-year average discounts or 2-year average discounts. We are seeing some pretty rich valuations among the closed-end funds. So people often ask, why should we buy a closed-end fund when you have options of ETFs or mutual funds? Why should they buy a closed-end fund? Closed-end funds are not for every investor. What we start off with, knowing the risks that are involved in closed-end funds. Maybe it is the volatility, perhaps lack of liquidity within the closed-end funds. That means stock prices could go down or go up fairly quickly. Also, the number one reason you should consider closed-end fund is that excess income that you get. Closed-end funds have the ability to use leverage, which other structures may not have, and as a result, you may be able to get a little bit more income than, say, the underlying bonds. So if you're buying a muni closed-end fund, you may be able to get 200, 250 basis point more in income from a closed-end fund versus just buying a straight muni bond itself. So that's your trade-off for taking on additional risk of leverage, but you are also getting extra income if you can, in fact, stand the volatility and stand the risk that comes in with the closed-end fund. So that's the number one reason people should keep in mind and consider buying closed-end funds. The other part of, in terms of why you should consider closed-end funds, there are often times, because closed-end funds can trade at a discount, there are times when the disconnect between the stock price and the underlying NAV is significant. And if it's just related to panic selling in the marketplace, that's your opportunity to jump into a closed-end fund where the market price has really reacted pretty negatively, and you may be able to benefit as things calm down. You may be able to make up some of that discount that you bought the fund at.